Hi, I'm Father Bob Gahl, and I'm in the Bush School of Business at Catholic University of America. I'm the director of the Church Management Program at Catholic University of America that offers formation for priests and also lay people in good best practices in church governance so that all of our church institutions might employ best business practices. This is related to my own research in intergenerational human flourishing because one of the courses that we have in church management is called The Virtues of Priestly Fatherhood. In order to understand fatherhood, we need to understand the difference between men and women. We need to look at sexual differences and how the virtues that are specific to living our masculinity and femininity affect organizations, affect families, and are handed down across generations. And therefore, this concept is called intergenerational human flourishing, is how the development of one's masculinity and femininity is not something just within one's own lifespan, but that depends upon one's parents, upon one's grandparents, upon one's relation with them. This is all related to business practices. And this may seem surprising, but the title of our paper is Financial Risk Taking and Testosterone. And we found some amazing features of research today that have to do both with financial risk taking and the propensity for such risk taking and finger length. And now this is particularly surprising, but not for those who are doing research in the area of sexual difference, because it's been known now for some 15 years in the research, in the literature, the scientific literature, that proportional finger length between D2 and D4 is indicative of the amount of testosterone that one had in the womb. And therefore, of course, the difference between men and women, because men have a significantly greater amount of testosterone than women do. We also find, of course, a variance among men and among women. There's also, of course, much more complicated features of this research that we hope to engage in the future. For instance, regarding how there are changes in testosterone across one's lifespan, even across one's day. And it has to, even across the last minutes, that has to do with conquest and competition, and it's very much related to risk taking that also impinges upon financial risk taking, especially with respect to financial trading. One feature of the intergenerational human flourishing and how it affects testosterone in men is how cortisol, which is the stress hormone, affects the amount of testosterone that is available metabolically within one's system. Now, this impinges upon one from the very early stages, even before one's birth, when a baby boy is in the womb of his mother. If the mother is experiencing chronic and extreme stress, that can affect the amount of testosterone available to the boy. All of this is available in current research for us to explore how this then might affect the propensity towards risk-taking. Now, all of this regards whether or not and to what extent we ought to seek complementarity of diversity of populations on the trading floor in order to avoid an excess of animal spirits or an inflation of the markets due to excessive risk-taking. So our research is a window into sexual difference, but now I'll hand on the mic and the screen to Gavin Lewis and to David Fritz, who have gathered the data and made some really fascinating considerations, also regarding mate selection and the diversities of testosterone in the population and the propensity towards risk-taking. Thank you.
Thank you, Father Gahl. I'm Gavin Lewis.
I'm David Fritz.
And we're both business students at the Catholic University of America's Bush School of Business. So we're going to build off of some of the remarks that Father Gahl made earlier that have to do with, does finger length predict risk propensity in financial trading? Well, yes. Insofar as finger length, specifically a lower digit ratio between your 2D and your 4D fingers, that's your index and your ring finger, signals prenatal exposure to testosterone and estrogen. So what does that mean? That means that in men at least, your ring finger is typically longer than your index finger. This is a signal of testosterone, specifically prenatal exposure to testosterone. Which means, and men with higher prenatal testosterone showed higher levels of aggressive behavior. Exposure to testosterone during fetal gestation correlates to increased testosterone as an adult. So this combination of aggressive behavior, increased testosterone as an adult, this actually has a dramatic effect on your propensity towards risk and therefore financial.
Thank you, Gavin. So men are more prone to risk, including financial risk, because of their proportionate propensity to attract mates promises greater payoffs due to testosterone. Higher levels of testosterone increases predictions and optimism regarding future events and price activity. And we'll see how that affects stocks later in this presentation. In a Harvard study where they looked at Harvard male students' saliva samples, men whose testosterone levels were more than one standard deviation above the mean risked 12% more than the average man.
Now, if we were to look at this correlation between testosterone and your propensity towards risk, especially in financial trading or investing, what better place to look other than a trading floor? Trading floors are highly stressful, highly competitive environments. And fluctuations in two endogenous steroid hormones, like cortisol and testosterone, accentuate the stress and the competition of environments such as a trading floor. This is because cortisol is elevated in response to physical or psychological stress. And it is particularly sensitive to situations of novelty, uncertainty, or threat, much like the way that a stock might go up, might go down. Uncertainty, threats, stress. Acute increases in cortisol promote fear, physical arousal, and sensation seeking. So all of these sound like something that you might have as a man, but sensation seeking specifically can be applied to your propensity towards risk in order to seek the sensations of getting a high return in the market. Now, testosterone predicts both success rates and confidence in competitive encounters, with levels increasing in response to victories or challenging situations, as part of a positive feedback loop termed the winner effect. So when you combine the sensation seeking that comes with cortisol and the greater desire and need to win when you're stuck in, maybe not stuck in, but when you're a part of the feedback loop that's called the winner effect, because of testosterone, your propensity towards risk goes way up. So if you were to look at some graphs, some bar graphs that we found from a study where it measures exactly this, we can see that when subjects in the research study or in the research showed that when given placebos of something like cortisol, people invested in low variance stocks, as they always would because they're less risky, but they didn't invest in the high variance stocks because the risk associated with them was too great. And they didn't have, and only having a placebo effect, no effect was done to make them want to invest in those high variance stocks. But when we see that cortisol was administered, we can see that low variance stocks, the level of people that invested in low variance stocks diminished, while the level of people that invested in high variance stocks went way up.
Very similarly, when looking at the testosterone chart, you can see that investment in high variance stocks was also significantly increased following testosterone administration.
Now, if we were to zoom out and look at risk appetite generally speaking, we can see that testosterone and cortisol both have different effects on different things. And we included a scale going from low to high to show the risk appetite for these different things. So for your own viewing pleasures, if you would like to take a look at that, just so you can learn more about our project, that's there as well. To conclude, testosterone-driven investors exhibit a stronger preference for lottery-like stocks and trade more frequently. Individual and aggregate cortisol levels predict subsequent risk-taking and price instability in asset markets. And as Father Gahl mentioned earlier, contemporary scholars can now confirm that Keynes's claim about the market being driven by animal spirits with their observation that irrational hormonal biology fuels exuberant trading floors. In conclusion, while economic models often focus on rational analysis, we cannot overlook the biological factors at play. The interplay of hormones like testosterone and cortisol profoundly influence financial markets, often in ways that traditional theories haven't fully accounted for. So next time you observe market trends or make an investment decision, remember, there might be more than just numbers and charts at play. There's a whole hormonal dance influencing these choices, potentially leading to those moments of irrational exuberance we occasionally witness in markets. Thank you.